Well, welcome everyone to episode 16 of the Real Profit, Real Perspective podcast. I'm Connor Malatesta, and I am joined, as always, by my absolute favoritist financial advisor in the whole wide world, who also resides in North Carolina, Ryan Bannister. Ryan, how you doing?
I just love hearing you say that. I am just peachy. How are you?
I mean, we get so few compliments in our day to day. I figure, what better way to make sure we keep the mood up than by complimenting each other, which I think is a little self-serving.
Right?
Spend most of my time just sending emails going, please, can I have documentation, please? It's been like 3 months. Can I pretty please have it? I swear I'm trying to help.
I'm still here and I still need this stuff.
No matter what you do, I do still need this stuff. But okay, fine, whatever. We don't have to. What? Fine. Hey, we move at your speed.
Yep. Yep.
So I know we've been talking a little bit. We're kind of struggling to come up with ideas for this episode, and we finally kind of settled on what better way to give ourselves infinite content than to just talk about what's going on in the news. So we had, what is it? We wanted to talk about tariffs, taxes, and then time permitting, anything else. Is that kind of what we'd agreed upon?
Yeah, dude, there is a lot going on in the world, and I don't have to tell anyone that, I'm sure, because it never escapes our view. The headlines and, it just like you said, it's a pretty topical episode, and I think it's a nice change, at least hopefully for some listeners from, like you said, the more lecture-based style, and I think yeah, I think it'll be a good one.
I can definitely see this being our first episode where we're going to get halfway through and go, oh, that didn't flow well, but both of us are more used to lecturing than we are from just kind of shooting the shit. So, we'll just kind of see what it is. But I think what is it, the big headline that we've been seeing? So I think was it today or yesterday? I think this week was the announcement that there's what is it, 15% tariffs, I think, on the European Union, if I'm seeing these headlines correctly.
Yeah, that's the most recent one I've seen. So what's today? The 28th as of the recording. So yeah, that's the last one I've seen. And man, there's a lot of goods that come from the EU. So
Yeah, tariffs are always it's always interesting to think of them not just as a tax generating or like a revenue generating tool, but more of a global diplomacy tool. I think to begin with, just to make sure that everybody that understands how tariffs work. Functionally, at its core, all a tariff is basically a sales tax paid on international goods. So one thing that I have heard kind of thrown around, I don't remember who had said it, but a tariff is not American tariffs are not paid by other countries. They are paid by US based individuals and businesses that are buying international goods. So if you're trying to get something into the country, when your shit hits the dock and you want to pick it up or whatever you got there, you have to pay to I think, I don't know, customs, whoever oversees. I could probably look that up, but whoever's collecting it, you as the importer have to pay that tariff to the US government. It's not paid by the person sending their stuff here. So that's kind of the first misconception that I wanted to kind of just address real quick before we get into that, so that as we talk about implications or our thoughts on things, that that's how it works. It's not paid, when we put a tariff on Japan, it's not paid by the Japanese. It is paid by whoever's buying the stuff from the Japanese.
yeah, and it helps me to remember too. It's incentivizing more, either production or whatever manufacturing here within the country. So you do that what by increasing goods that you would import from other places. And I always kind of go back to like a board game or any sort of tactical game where, maybe I can't think of any specific example, I'm blanking, but like geographically, there's some countries that sit on top of resources where it is just much cheaper to produce said good or widget, whatever you're looking at. So sometimes, tariffs can, I think, inhibit like the natural flow of goods
I mean, I
because
think that's the biggest, or at least one of the biggest, the criticisms of them is that usually it's phrased as a kind of a hiding, what's the phrase, market inefficiencies, I think, where you're kind of, the government's kind of stepping in and artificially increasing the prices of particular things that are coming from overseas. And so if you slap a, say, 20% tariff on something and it costs you $100 to import it, well, you've got to pay 20% on that. Now your cost to actually import it will be $120. And so that's always the, you know at least one of the criticisms is it allows lower performing domestic manufacturers or producers to kind of hide behind that. It's which I mean, I don't disagree with. If you're artificially the increasing price, that is the government meddling, but that also sometimes, I mean, that's why it becomes kind of protectionist. If you've got a country that's doing manufacturing but they don't have labor laws and you can pay people 50 cents an hour, then of course their stuff's going to be cheaper because we don't have to pay for pesky things like personal protection equipment or high wages or payouts when workers die.
right, when your workers are the resources versus like, I don't know, like gas or like food or something.
Yeah, yeah, it definitely, like, I understand doing it from kind of that perspective of, we don't want our kind of domestic manufacturers to be hit hard because they can't compete with stuff from, you know, overseas. Um I mean, that's been kind of I think that one of the biggest problems we've had with manufacturing over the last 50 years is how much of it ended up getting outsourced, chasing those lower costs.
Right. Yeah, absolutely, man.
So I
And
mean, I can't say I necessarily disagree with kind of part of that idea, but I don't know. It's a weird one.
yeah, it is. And I think your earlier point too of it being now more of a diplomacy and negotiating tactic versus an actual incentive to move the flow of goods, right? Like, yeah, maybe it's an incentive to bring some manufacturing back over here, but is it more of a tool to, put ourselves back in the mix a little bit more? I don't know if that's the right way to say it, but
Yeah, I mean, it's if you look at it as a more of like a national security type view as opposed to just economic. I mean, there's kind of a couple different ways you can kind of help those domestic businesses. I know if I remember the articles I was reading correctly, I think, for example, the Biden administration was a much bigger fan of direct subsidies. So rather than imposing tariffs and raising the costs of imported goods, they would instead effectively reduce the cost for the domestic manufacturers with, direct subsidies, tax breaks, whatever it is. So if you've got, rather than, say you got a domestic manufacturer that can make a widget for, $110 per widget, and the international one is at 100, and rather than, doing a 20% tariff and raising costs, which can be inflationary, can be, that's a real complicated topic, you instead would, basically give a $30 per unit subsidy or something to the domestic so that their cost is substantially lower, and then they can sell things at cheaper. I mean, I don't know. I can't, unfortunately, because I'm not an economist, can't really say which one is correct versus incorrect. I just think the kind of general I don't know if purveying wisdom is the word, but the usual, I think the usual strategy over the last decades has been direct subsidies as opposed to directly implemented tariffs.
Yeah, because I think the big headline I saw from all of this was, tariffs really haven't been a huge tool since what, like the 30s or earlier than that. I mean,
Yeah, the what is it? The Smoot-Hawley Act of 19 or the Smoot-Hawley tariffs of 1930, which they say contributed to the Great Depression
yeah,
pretty heavily. So there's been a lot where, you start trying to read articles and all the actual economists are like, who knows? Who knows what's going to happen? We have no data to really draw conclusions one way or another. It's a mystery.
yeah. Well, and I'm actually just kind of thinking this through now that I'm listening to you work through it, and it's sort of just changing who the bearer of the cost is, almost like the subsidies. The government bears that cost, I guess, through which in that sense the taxpayer still bears the cost, like through taxes, but in a sense too, we're almost putting it on the credit card in that way, right? Like because we fund so much of our government activities through debt,
Hmm.
but through tariffs you're still putting it through essentially to the end consumer or the company itself. So somebody's paying for it either way. It's just which mode are you going to go through?
I mean, yeah, and considering how much is driven by, the consumer spending is because ultimately when you break down the flow of money, which I'll admit, I had taken a couple econ courses in college, and when it started to talk about the velocity of money and all that stuff, it meant absolutely fuck all to me.
Oh yeah. Yeah, I thought I was going to have an econ minor until I got into like 301, like the intermediate econ that was the step past like beginner, micro, and macro. And I was like, I'm going to fail this course. I don't know how I got out of there.
I think I actually only took macro in college. Um, I think I managed to get around not having to take micro because they I think the only requirement at WIC was actually to just take intro to economics, which I had taken I'd taken an AP class in high school, and
Oh,
so it
I
was kind of a
gotcha.
repeat. So
Yeah.
I was not going to go any heavier into the econ and statistical econ and all that stuff. I was like, I'm going to stick with my simple mathematics of addition and subtraction and accounting. And then I got
Yeah.
out into the real world, started a business, and went, oh, hey, cool. I'm living microeconomics right now. Awesome. Amazing.
Figuring out
Uh,
in real time.
yeah, and then I can't remember when it was because the 6 years have blurred together, but I read an article about the velocity of money and I went, "Oh, I get it because the consumers, so you got the consumer, right? So let's kind of set our ground understanding here for everybody that's listening. Ultimately, I didn't understand for the longest time why consumer spending and consumer sentiment was one of the most important things that a lot of economists and, analysts and forecasters and blah 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 would follow. It was like, okay, why is that? And then getting out and starting the business and having to do my own sales and stuff like that and getting an understanding of clients that I was working with, I went, "Oh, wait a minute, now I get it." Because the consumers spend money at stores, places, things, right? At businesses usually, right?
Right.
Those businesses then have other things that they will need, whether that's suppliers or accountants or financial advisors or whatever, or other service providers that are out there. They need software subscriptions. So the money goes from the consumer to the first level of business. Then that business has the other businesses that they may need things from. And then those businesses will have those things from. But then ultimately, when you look at the money that's hitting each of those businesses, it also then flows back to the employees in terms of wages, and then the employees go out and spend money, and then that money circulates back. Or you get 2 degrees away from that, and the accounting firms have their employees, they spend money, or it goes to the owners go spend money, and it kind of circulates almost like blood, basically, which is velocity of money is basically how long does it take for the money to kind of go from the end consumer back through the system or to the government, then back into the broader economy and kind of keep circulating going. And kind
Mhm.
of, as I'm saying this, going back to our previous episode on cash flow forecasting, where you could have a profitable business but it doesn't have the short-term cash that's needed. It's that slowdown of moving from the consumer to business to business to business is what they always, kind of look for, because that then impacts your short-term cash needs. And then as that starts to slow down and businesses can't handle a 2 week or 4 week lag time on, payments on, account, then suddenly they got to start laying people off. They start cutting back their own spending. Those people that just got laid off aren't going to be doing as much spending. So your consumers aren't spending as much. So then there's not as much going from the consumers to the businesses. Then the businesses aren't paying their businesses. And then the whole thing starts to kind of slow down. And congratulations, baby, you got yourself a recession. I think I should get a part-time job explaining econ.
Yeah, that was really well explained.
So tariffs are kind of a way to they can kind of impact that overall spending through. Normally it's kind of like when the government does subsidies and it goes directly to the businesses. And this is where, you know what, honestly, I'm having an aside here where we could have a whole discussion on government spending and how that works when it goes into the economy and stuff like that, and everything, when it says, these, oh, the businesses are getting these kind of subsidies and all that. That's terrible for the consumer. To go, well, it's one of those, like, I've kind of laugh and go, say the weapons going to Ukraine that they're paying for, right? And I go, well, we're giving them all this support. Well, if Ukraine gives us money for American-made weapons, that money goes to American companies, which then goes to American consumers, which then goes into the American economy. Not really something I've got too much of a problem with. I mean, hey, guns and butter and all that stuff. But when you do the direct government subsidies, it kind of it's money that's not hitting the consumer, but it's going to the businesses to kind of keep things moving. That's why stimulus, right? That's basically why they call it a stimulus, is when you put that money into the businesses or into the hands of the consumers to then go out and spend and get things moving again, kind of like trying to jumpstart your car. Whereas tariffs can have the drawback of it's a direct cost on either the consumer or the intermediate, and then that money is kind of coming out of circulation, then going back to the government.
Right. Right.
Where then it does get, spent again, but in the short term, it is an additional cost, and, it plays into your kind of short-term cash flows. I think I was reading a couple articles that, like, the overall impact on the end consumer is a little nebulous on how much it's actually impacting things because of how complex stuff is. But it's definitely a different way of trying to protect American businesses as opposed to just doing, direct subsidies.
Yeah, because that's the question that comes to mind for me. Is it's got to be impossible or very difficult to measure, but how could you see the impact of tariffs on the velocity of money? And if it's a 15% tariff, does it slow the velocity of money by 15%, or is it some multiple of it? Or it's probably very difficult to measure. But
Yeah, I've actually got an article up. This is from State Street, who I'll admit I'm not super familiar with, but they look like they at least know what they're talking
I think
about.
that's
So
pretty good source.
let's see here. This was the 2018 tariffs imposed by the U.S. raised the average price of U.S. manufacturing by approximately 1%. This inflationary impact was particularly pronounced in industries where imported inputs are critical, such as electronics and machinery. Additionally, sectors reliant on global supply chains face compounded inflationary effects due to the cascading cost of tariff across multiple production stages. So the businesses got hit. Their costs went up by about 1%, and a lot of these larger ones, I mean, if you're talking a 5, 6, 7% profit margin, that can kind of eat into it a little bit.
Yeah.
And then it got a little bit worse because you'd be getting hit on multiple sides from the different industries. The pass-through effect on consumer prices, however, proved to be more complex. Using a combination of customs and price stats good level data, the study authors found that while most tariffs were absorbed by U.S. importers, end consumer prices were only significantly affected when tariffs were very high, as seen with products like washing machines, for example. In contrast, when tariffs levied were 20% or less on goods such as handbags, bicycles, and fridges, the impact on consumer prices was de minimis. The authors conclude that during the 2018-2019 Trump era, the size of the tariffs and their perceived longevity likely influenced U.S. retailers' decision to absorb the cost through reduced margins. So it's interesting in that when you get into something like tariffs, it's not just the pure numbers of it. It's not just a if all costs go up by 15%, everything's going to go up by, 15%, because ultimately it also plays into almost like human behavior almost, because you're basically using it to try and adjust on a macro level people's spending habits,
Right.
which is always blows my mind that a lot of these things are basically geared. It's not that we're trying to just purely raise revenue. It's not like a business saying we're going to charge 5% more because we want to make 5% more. But ultimately, what you're trying to do here is to actually influence the end consumer's behavior, which they say, the consumer is a rational being. I think is one of the core tenets of economics,
Hmm.
or that's businesses or market participants are rational, which I think most of us would probably agree most people aren't. In the aggregate they are, but individually it's kind of a wild thing. And I guess the other part of it is also from a international policy or a diplomacy standpoint, that direct subsidies do not give you the same kind of direct bargaining chip as tariffs do, which is just, I mean, just kind of is what it is. I mean, when
Yeah.
tariffs have
Hmm.
the noise, they show up in the markets. Nobody really pays attention to. We've approved more subsidies for this particular. Nobody really pays attention to how much the farming industry gets in, subsidies, and that doesn't really play into international diplomacy. Tariffs, though, get the headlines and give us things to talk about and kind of focus on. So it's, that's kind of an interesting one where it gives a little more of a, if you're trying to negotiate with another nation state, it kind of gives you something else to play with.
I think so. And kind of like my question earlier, in that sense, I don't think it's a one-to-one effect. Like if you slap a 15% tariff on the EU goods, all of a sudden vehicles are 15, like maybe we'll just use that as an example. Vehicles are 15% more expensive. So that BMW you're looking at it's gone from 50K to what, 60, 65,000, something like that. And I don't think your sales at that point slow down 15%. They slow down some multiple of that because everyone, or a good group of people, looks at that and says, I'm not paying 15% more. I'm going for this option. Maybe.
I also wonder though, like BMW, for example, and now some of them also get around just having manufacturing plants in the US. So to get around, the more they have US based, so you still have that BMW that may actually be US produced. But also, what percentage of people, now here's a compounding one that just occurred to me as you said that, is how many people actually pay for a BMW in cash up front?
So that amplifies your effect even more because you're paying interest on it for
How many
5
people
years.
actually pay attention to how much it's going to increase the cost on there, particularly if they've made the
Right.
decision, I want to get a BMW.
Well,
If it's
and
all,
to your point earlier too, that's my point, is also assuming that BMW automatically increases the price of their cars 15% rather than
Mhm.
absorbing all of that into margin, or some like 5% or some portion of it.
And also assuming that, it's not just maybe a quarter of the materials are actually hit with the tariffs because the other three
Right.
quarters are able to kind of get in from other places, that kind of thing. But I do wonder for part of this, if you've got easy access to credit, you know, how much does that also kind of keep people spending going? Because the people who are, say the pickup trucks, right?
Hmm.
A lot of people when they get their pickup trucks, let's face it, they're not doing it because they need a pickup truck oftentimes for work. They want it because they want that truck is kind of more of a lifestyle thing, or at least those are the ones that I've met where it's less about the cost and more about the status symbol of it.
Yeah.
That's why you got pickup trucks that are starting to push like 80, 90, $100,000 for a new vehicle. And what happens? Do people do they stop getting them? They just end up having a larger car payment, or they stretch out the repayment period because they still want that thing. And so, it's what impact does it have on spending? It's that
Yeah.
emotional. Who's to say? It's not just it went up, and so we're gonna have a decrease because it's more about status.
Yeah, and not to jump around, but to connect the dots a bit to the one big beautiful bill, one of the provisions that stuck out to me was the no tax on car loan interest. So I like, if just talking about our vehicle example here, so current state personal, like the interest you pay on your car loan is not deductible on your tax return, but
Mm-hmm.
the
Now, fun
new,
fact: if it's a business vehicle, the business can take that as a deduction.
there you go.
Yeah.
Yep, personal interest. So then the new provision allows a deduction up to 10,000 of interest on new car loans year 2025 to 2028, must be assembled US assembled passenger vehicles. So I think that is the interesting part that goes in there to me, like combined with the tariffs. I think that's almost, that could have an outsized effect on just the like 15%, for example, because you've also got this new law we just passed where any vehicle that's got its final US assembly, you can deduct the interest on that. So you think of like BMW, for example, well, they've got their big plant like pretty close to here in Raleigh, like it's in Greenville, South Carolina, where I'm
Mm-hmm.
pretty sure, this is not tax advice, so don't quote me on this, but I would be pretty sure that counts as US assembled passenger vehicles.
Yeah, I think it says that. Now, here's the other interesting part, because I've got that pulled up as well. It's a great segue actually from tariffs to taxes, which now that I say that out loud, I realize that's basically the same thing, just said twice under two different names.
It's a different form. Yeah.
Yeah, one thing on tariffs before we leave. This is just another kind of thing I heard thrown around that I just wanted to kind of put a pin in, which is the idea that tariffs can replace income taxes. No, they can't.
Oh
No,
man.
they can't.
Yeah. I was actually that was one part of this I actually read up on a good bit. And somebody I follow on Instagram, I'll have to find it and maybe throw it in the notes to the show, but he broke down the entirety of that, like looked at IRS revenues and from which revenue, like tax
Mm-hmm.
brackets they come from, how much each bracket collects in revenue, and like what tariffs would have to look like to replace income tax. And it's insane,
Yeah,
the
it's
actual
something.
numbers.
Yeah, I mean, if I'm remembering correct, it's something like you'd have to have a 300% tariff on every single import that comes into the country to replace individual tax revenue.
It's got to be crazy like that.
Yeah, and let's face it, the government, once it gets its hands on a source of revenue, does not like to give it up. Come on, are we? I mean, we can kind of fool ourselves here a little bit that they'll get rid of income. It's not going to happen. It ain't going to happen. There's no way it's going to happen. We all know the government likes to spend that money.
Yep.
It's not. That is not happening whatsoever. What they'll do is they'll increase tariff revenue, and they keep the income taxes as well. Just like fun fact, the income taxes were passed because of prohibition. Because at the time, the vast majority of the US government's tax revenue was alcohol taxes. Like an obscene amount of the US government tax revenue was alcohol taxes.
I never knew that.
Yeah, and so to get prohibition passed, they and it was challenged as unconstitutional at first whether or not they could do income taxes, but to as basically the compromise to get prohibition done by those that went, what are we going to do with all the tax money? It was then replaced with income taxes. So income taxes are a direct result of prohibition, and at the time it was kind of intended to be a temporary thing, and here we are 100 years later.
Mm-hmm. They should have just let people have their drink.
Yeah, although when you start to read some of the accounts of how bad prohibition was, you start to go, okay, that yeah, you know, when you had women and children homeless in the streets because the husbands were wasting literally all the money on booze, it was like, okay,
Yeah.
I can see how they managed to get a constitutional amendment passed to outlaw drinking. Could you imagine how bad something would have to be now to get everybody on board with something like that? We're lucky to get anything passed with a 51% majority, but to
Yeah.
get 2/3 of all the states and everyone in all of that, like how bad were things that they managed to get support for that?
Crazy.
Yeah, and now because they were a bunch of drunks, we got to deal with income taxes. But
And as such, we circle back to we want to drink more.
yeah. Fun fact on the no tax on car loan interest. So this is direct from the IRS. It is loans that are originated after December 31st, 2024. So for everybody that already had a vehicle loan from prior years, fuck you.
You're toast.
Glad I can't take a deduction. Fuck yeah. Love that. That's always something that I don't know. The allowing the businesses to deduct the interest, but not individuals, has always been something where I've been like, okay, why?
Yeah.
Like mortgage interest is deductible. Why not the car loans for the other major asset you've got? Or honestly, there's a lot of things that businesses are allowed to deduct that individuals aren't. That just makes me go, okay, like why not?
Yeah.
You know. But then again, most of the lobbying is done by big business, so I mean, I do get it.
Yep.
Obvious disclaimer that this is not tax advice. This is just opinions.
This is just two guys talking.
So I've got let's see, so this is the fact sheet for the One Big Beautiful Bill Act for working Americans and seniors, because there's a ton of shit in that bill, most of which we're not going to go into because what was it? I think we started scrolling through the Journal of Accountancy's article on it, and it's got a lot. There's a lot of stuff in there.
Yeah, when my like side-by-side chart that compares pre One Big Beautiful Bill to after, that chart is 6 pages long. You know it's a big, like the summary in like 8-point font is 6 pages long. It's like, oh my God, man.
It's you know, I'm glad to see somebody out there got paid a lot of money to actually write this shit.
Lots of somebody's wrote it, and now we all just have ChatGPT read us and summarize
to hopefully explain it, and then it'll say things that are wrong and nobody knows because nobody's actually reading it. And then
I'm
we
not
got
going back to fact check it.
Yeah, it's like, yeah, on page 227, paragraph 4, you're like, you know what? I'll take your word for it.
Yep.
That's why I'm not a tax accountant, and instead I just we read the codification. Woo! Let me read on accounting for construction loan interest. Yay! So fun. First one on here: no tax on tips. So effective for 2025 through 2028, because nothing's allowed to be permanent, employees and self-employed individuals may deduct qualified tips received in occupations that are listed by the IRS as customarily and regularly receiving tips on or before December 31st, 2024, and that are reported on Form W-2, 1099, or other specified statement, blah, 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 blah. Qualified tips are voluntary cash or charge tips received from customers or through tip sharing. Maximum annual deduction is $25,000. For self-employed, deduction may not exceed individual's net income without regard to this deduction from the trader, blah, blah, blah. Deduction phases out for taxpayers with gross income over $150,000 for single or $300,000 for joint filers. Self-employed individuals, I'm going to just go through this real quick and then kind of explain. Self-employed individuals and a specified service, trade, or business under Section 9 are not eligible. Employees whose employer is an SSTB are also not eligible. Taxpayers must include, okay, blah, blah, blah. So basically, between 2025 and 2028, if you regularly receive tips, they will allow you to not pay income taxes on up to $25,000 worth of tips. Phased out if you pull in $150,000 individually or $300,000 if you're married.
And to think I wanted to be savvy and add tips to my business, tip your
Fun
financial
fact,
advisor.
do you know what a specified service, trade, or business under Section 199A is?
And indeed I do.
That is us. So even if we started charging tips, we still got to pay tax on it. That is what I wondered how they were gonna do, um, basically do that kind of provision when they said no tax on tips. I went, all right, obviously they're
Yeah.
not just gonna say tips are tax free, because then everyone and their mother, the Girl Scout selling cookies, is gonna be hitting you with that. Would you like to pay a 15% tip on your cookies? And you're like, no, get the hell out of here. Um, Basically, if you're not automatic, and it's interesting. It says that listed by the IRS. I think they've got till like 20 October, I think, to clarify what those occupations are. But if you're
Yeah.
not regularly getting them, you can't start charging tips to not pay taxes. They're clever enough to know that that's what everyone was going to do.
Yep.
I already had people saying, "Oh, can I just go and do that?" I'm like, "There's no way they're going to be dumb enough to just be like, no, go ahead, just charge tips on whatever."
It's a free for all.
Because then I'm sitting there going, I don't want to have a breakout between tips and not tips on our clients when we do the accounting for them. That'll be irritating.
Yeah, because the first thing that comes to mind for probably just about everybody is restaurants,
Yeah.
servers, and yeah.
Congratulations, more. You're gonna really, really want those tips. Which, let's face it, if you paid cash tips, how much of that's actually getting reported? But that's a separate discussion.
Yeah. Hell, that's probably the reason they passed this. Now that you mention that, like they've got to have a estimate of what the unreported amount is on that. And
So I guess it's just declare your tips and
we both make out good because we the IRS are getting more revenue now than you,
and
the
you have to
honest
get more than
people, before you get a break.
Yeah. Here's an interesting one. No tax on overtime. So for 25 through 28, individuals who receive qualified overtime may deduct the pay that exceeds the half portion of time and a half that's required by the Fair Labor Standard, blah, blah, blah. So the maximum annual deduction is 12,500 for single, 25,000 for joint filers, and a phase out for 150,000 individuals and 300,000 for joint filers. Interesting that they just basically said income level of 150,000 is where a lot of the stuff is going to phase out.
Yeah. Yeah.
Except for the car loans, that's 100,000. But yeah, that's basically they're saying we will, if you're single, we'll let you not pay taxes on $12,500 of overtime. Everything beyond that, you got to pay tax on. But 25,000 if you're married. But it's something.
Pretty cool. Yeah. Probably a couple $1,000, $1,000 or $2,000.
I mean, yeah, I could save you a couple grand there.
Yeah.
Of course, if you're a salary like we are, or business owners or whatever, you get nothing. But
yeah. Still can't
fine.
take advantage of that one.
The blue collar workers have had it too good. Where's our white collar targeted deductions?
Yeah.
Man, it got dark in here. What the hell?
Oh, well, you are reading the tax law, so
I probably, it's good that I'm hiding in the dark right now to read this. Like
you have to be in a cave to do this.
Like the little tax goblin that I'm turning into right now. Here's the no tax on car loan interest, $10,000. Deduction phases out for $100,000 in income. Loan has to be originated after 2020, so anytime starting in January 1st, 2025. Used to purchase a vehicle, the original use of which starts with the taxpayer, so it does not qualify for used vehicles. Interesting. It's not for business or commercial use. That doesn't really matter, because if it's for business use, you can just take it as a deduction, as a separate deduction anyway.
Yep.
And the loan has to be secured by a lien on the vehicle. If the loan is later refinanced, interest paid on the refinanced is generally eligible. Personal vehicle, final assembly in the U.S., blah, blah, blah. And new deduction for seniors. 2025 to 28 individuals who are age 65 and older may claim an additional deduction of $6,000 in addition to the current additional standard deduction for seniors under existing law. So per eligible, so 6,000 per individual, 12,000 for married. Phases out for just a gross income of 75,000 individually or 150,000 for joint filers. They have to be 65 on or before the last day of the year and available for both itemizing and non-itemizing. This section already has a lot in it, and that doesn't go into all the other shit that's in this thing. Like they've made the standard deduction permanent. Yeah, so that's been updated. Temporarily increases the state and local tax cap, which I know had been a big point of contention for people who live in the horrific states of New York and California who pay a shitload in
Yeah.
taxes. Let's see. Increases the amount of child tax credit to $2,200 per child. It makes the. I didn't realize this was a temporary one. Act makes the qualified business income deduction permanent and keeps it at 20%. Interesting. Also includes a minimum deduction of $400 for taxpayers. Okay. Some stuff relating to estate and gift taxes. Nobody cares. AMT. Nobody cares. Mortgage interest deduction permanently extends that.
I will say
Yes.
the estate tax provision actually is pretty sweet that passed, because if it didn't pass, the lifetime exemption was going to go back down to like 2 or like a ridiculous, or it reverts to 5 million after 2025. But instead, you over your lifetime have an exemption now of up to 15 million for gifting to
You know,
your family.
I gotta admit, I was worried. I was really worried I was going to hit that $5 million cap, but now that knowing it's up to 15, I think I'll be all right. It gives me a target goal there to that.
You'll be a-okay.
Whew, that was close. I was counting up my all my gifts this year and was like, oh man, I'm at like $50. I'm gonna hit 5 million in no time. God, there's just so. Oh man, we were talking about this, which sometimes the random stuff that gets thrown into these bills is always funny because you can obviously tell that it was pandering for a vote. Now this one, who knows who lobbied for this? This is for bicycle commuting reimbursements. The act permanently excludes qualified bicycle commuting reimbursements from the list of qualified transportation, fringe, and other commuting benefits, making them taxable to employees. So for all of you out there who are a bunch of losers and ride bicycles to work, and work pays you to ride your fucking bicycle, you got to pay tax on that reimbursement now. It's what you get for trying to be eco-conscious and, not drive a vehicle and ride a bike to work, you loser. Now you get to pay tax on that, which I didn't even realize we could reimburse for bicycle commutes. Although
Yeah,
I
I
don't know
did not
what you'd
know
be
that.
reimbursing for. Here's $50 for, I don't know, clothes or something.
Go get on public transportation now.
Get your ass on the bus. They permanently eliminated the deduction for moving expenses, except for the members of the armed forces and certain members of the intelligence community. Nice. Something about wagering. There's so much. There's the no tax on tips, no tax on overtime, Carlos. There's an adoption credit. Makes a portion of the adoption credit refundable. Interesting. Trump accounts. No better time to
Yeah.
what is it?
Yeah, Trump accounts will be pretty interesting. There's still a lot of gray area around them. Like the Treasury basically has to list out anything useful. But we have this thing hanging out there now that's possibly an option in a year.
Do you get to take advantage because it says child born between 2025 and 2028?
Yeah,
You guys get lucky enough for to plan for that?
not at this. Well, Charles was born in 2024.
You idiot!
Yeah, we'll see. But I mean, any like questions that anyone has around Trump accounts, you're pretty much going to have to wait until next year to know anything about it.
It
It'd be
appropriates
nice.
410 million to remain available through September 30th, 2034 to fund Trump. So, just real quick, let me do this math. If we take 410 million divided by 1,000, that's enough money for that's less than I thought. 410,000 babies. How many babies are born in the US each year? Approximately 3.6 million.
Interesting. That's like what, 10%?
Yeah,
Roughly?
a little bit more. So
Hmm. Or
that
is
is
that like
wild.
1%? That's like 1% of the population.
Yeah.
Interesting. I know that rate is drastically plummeting too.
Well, that's the big push with immigration, is because otherwise, with just the native, our native birth rights. Funny enough, that actually I was reading an article about that, about the kind of depopulation bomb facing a bunch of different countries. South Korea in particular is like the poster child, I think, for
Yeah.
population crash. Um, but we want to keep this on a positive note, talking about, tax bills and tax cuts and all that stuff, and not the impending societal collapse of South Korea due to the impending population crunch that they're going to have and that most developed nations are facing. It is interesting though that they um individuals under 18 made in calendar years before the beneficiary turns 18. I'm just looking at the Trump accounts, where realizing it's only for about 410,000, um, basically enough to give 1,000 to 410,000 babies, is less than
Yeah.
I kind of thought. It's like 4 months worth of babies.
Interesting.
I wonder if it's a, like, you've got to contribute like 10K or 5K a year or something, or whatever it is, in order to qualify for it, and that they're not just, you got a new kid. Here's your social security number, and here's your new Trump account. It's got $1,000 in it. They can't touch it until they're 18, because then
Right.
that'll go quick.
Oh yeah.
They'd be like, what
Burn
about
through
those of
that.
us in 26? What about you born into it? You should have planned better and had babies sooner.
Yep.
God, there's so much. Not even that was just individual stuff. There's a lot. The, God, there's a lot in this bill. I see why they called it the big beautiful bill. It's one big ass bill.
Hmm.
Um, I did find this funny. There was the one section here. The Act amends Section 142A1 to ensure spaceports are treated like airports under the exempt facility bond rules. Spaceport is defined as a facility close to a launch or reentry site that is used to manufacture, assemble, or repair spacecraft or space cargo, or is used for flight control operations, to provide launch or reentry services, or to transfer crew, space flight participants, or space cargo to or from a spacecraft.
Gotta love spaceports.
Yeah, Space Force, spaceports. Say that 6 times fast. SpaceX. Just
There's like
it's wild, the random shit that just ends up in these things.
there's like 5 people who can take advantage of that.
Well, I wonder if it also ends up, it's like NASA control stuff or something like that. Well, I mean, Boeing, I probably SpaceX, any of them that maybe are doing or providing any of those
Yeah, I was
those
thinking like
services.
the 3 people who go up in Blue Origin every year that
Yeah. Well, that's under the business section, so it might be a few more than just the individuals, but yeah, just wild international stuff. Not even going to get into a bunch of um oh, interesting. They did bump up the 1099 reporting threshold. Hmm. It's going to go up to $2,000 in a calendar year, up from 600. And then it's going to be indexed annually for inflation in calendar years starting 2026.
interesting.
Yeah. Well, less work for us to file 1099s. Oh
Yeah, make
no.
things a little easier for us over here.
Interesting. And they also reverted, so for those that use third-party processors, The act reverts to a prior rule under which a third-party settlement organization is not required to report a 1099-K unless your transactions exceed $20,000.
Yeah, I had seen that part. I was a little bummed about that because I had some clients who took advantage of that this year. Didn't have to do the 1099 for clients, and now they will have to do that again. So fun.
I think it's saying that, yeah, no, they're bumping that up to 20,000 because it was scheduled to start for the aggregate reporting to $600 next year. So I think they've made it permanent that it's got to be 20,000 or more.
Yeah, I interpreted that as beforehand, if you paid somebody via like credit card, right?
Mm-hmm.
And you paid them over $600, you had to file the 1099. So then the new
So
law
I think
came
fun
in.
fact is that actually it still is, if I'm remembering this correctly, grain of salt. I'm doing an air asterisk. Is that you basically got around having to actually issue 1099s when you paid via credit card,
Yeah,
because the credit card company would pay, and then it was the credit card company that would have to do the 1099K for whoever was receiving it. And the talk had been that if you were getting paid via the payment processors like credit cards and stuff, that if you got more than $600, it would be issuing a 1099K.
right.
Whereas now it's going to go back to, they're not going to give you 1099K unless they've paid you in excess of 20 grand. And then the actual 1099s are going from $600 up to 2,000, which is handy because that is an obscenely low number.
Yeah.
Yeah. There's so much other. Yeah. There's a bunch of other stuff in here, but I know we've also been talking about this for almost an hour. The other is when we said tariffs, taxes, and other. The other is just the other parts of the tax bill.
Yeah.
And of course, like most of this, the real answers to this aren't going to come for months until certain portions of this are taken to court, or the AICPA has to lobby for additional clarification on what the hell, for example, the um, qualified occupations that are listed by the IRS as customarily and regularly receiving. First, they have to publish that list. Then the list is going to get published because everyone who otherwise was kind of getting tips is going to be like, well, hey, wait a minute, we normally get tips. And so then there's going to be more. And so it's one of those where now we have to actually wait and see how all this stuff's going to play out before we can actually
Yeah.
understand everything that's kind of in here.
Yeah, that is the funny thing about how government works to me. They've passed the bill, and now essentially all of the agencies it applies to have to figure out how the fuck they're actually going to do these things.
Woo, we're done. Now let's what the hell were we which I think just comes down to kind of the disconnect between Congress and the actual enforcers of the law, where they'll say some shit and then they're sitting there going, what the hell does this mean? What do you mean with the regular what? Okay, we got restaurants and your door people, Uber drivers, taxis maybe. I'm a contractor that sometimes gets paid with tips. Does that
who else works for tips?
restaurants?
I guess some hospitality workers, yeah.
Yeah. So we got restaurants and hospitality, and then maybe I don't know. Do like nannies get paid via tips? That's actually that I kind of want to know what industries usually receive tips.
Hairstylists, we forgot them.
Oh yeah,
casino dealers.
That's right. Oh yeah, salons. I see hotels, food delivery, taxi ride sharing, and then some. Okay, so we basically did have the like 4 industries that applies to.
Yeah, we had a pretty good understanding.
That's it. No tax on tips. That 4. We got 4. Restaurant, which I'm going to argue the bartenders and all that falls under restaurant.
Yeah.
Hair salons, and then hospitality, and then Uber and transportation.
Yeah.
Now, of course, part of this is let me say, the AI answer is also spas, gyms, and some home cleaning services are increasingly incorporating tipping options. Where the hell am I tipping at the gym?
Oh, that is true. I have tipped a masseuse before. Like that's pretty standard, I think.
That's a like a hair salon, but for the body.
We'll go with that.
Home cleaning services. I thought we just paid whatever. I don't pay for that, so I wouldn't know. But gyms, you tip your personal trainer. I thought that was just included in the fee.
Yeah, I've never done that.
The
Sorry,
next time you
personal
get
trainer.
next time you get your personal trainer, it's gonna be like, hey, can I get a tip? No, you can't start now. Fuck off. Yeah, so there's like four kinds of people that basically applies to. Now the overtime is gonna that's definitely hitting more the construction workers and all of that.
Yeah, I almost wonder if that's some sort of response to the big push for like $15 minimum wage for restaurant workers. It's like, well, we're not going to give you that, but we'll give you free taxes on your tips.
Yeah,
I
yeah,
mean,
and
that
then I
gives you
wonder,
what, like maybe a 20% pay bump.
yeah, and then I mean the one with the no tax on overtime. I mean, let's face it, that's basically pandering, but who cares? You
Yeah.
know, good for everybody else. Um, whatever. It was one of those. Sometimes you see stuff in there where you're like, was this based on any sort of policy intent or anything? No, this is vote securing, but who cares? That everybody fucking does it. But woo. Man, I think our current events episode just turned into our second longest episode ever. I think if we keep talking, this will surpass last week. But we should
I know
probably do this more often.
this was a good one, man. We were worried, I think, about this like getting to like 30 or 40 minutes, and yeah.
I noticed at 30-minute mark, I was like, we've only talked tariffs for 30 minutes, which shows what a couple of nerds we are, that we can talk about tariffs and economic policy and diplomacy and all that for 30. Oh, where did the time go?
It's funny how little 30 minutes actually is. It really goes by quick.
Time flies when you're having fun,
Right?
or, constantly thinking about what you're going to say next.
Yeah.
We didn't even get into my last article that I wanted to talk about, which is an article in the Wall Street Journal on the depopulation bomb.
Well, there's our segue.
I think we'll save that for next time. We talked about declining fertility rates a little bit, but this was depressing enough talking about taxes. Let's not talk about impending global population collapse. But I think with that, I think we're at a pretty good point. We've covered those at no level of detail really, but enough to hopefully educate people a little bit on how tariffs actually work, probably some of the rationales behind it, our thoughts on it, and just kind of go from there. And hopefully people are a little more informed as to the parts of the tax bill that are probably going to be most relevant for what they got going on.
Yep.
Most of the stuff is not going to hit most people, but such is life. But then with that, we hope everybody enjoyed listening. As always, if you have made it to the end of this episode, we greatly, greatly appreciate you. If you're on YouTube, don't forget to like, comment, and subscribe. Smash that like button. And if you're on Spotify, I don't know, angrily tap the thumbs up thing to follow. And we will see everybody on the next episode.